traders, Cousin Vinny coming to you from theclosingprint.com on December the 8th, 2019. In this edition of your weekend video newsletter, we'll discuss the indices and all of the indicators that are mostly bullish going into the second week of December trading. The big cap tech stocks were mixed. Google, Apple, Microsoft, and Tesla moved higher. The rest of those high-tech growth stocks moved lower. The bond stock ratio, nonetheless, is bullish, as well as HYG and junk. The Dow Composite is bullish above the 9 and 20-day moving average. S&P 1500 is bullish, and the XII Arca Institutional Index is bullish, seeing buyers pushing it back between standard deviation 1 and 2 at all-time highs. Tick started off the week moving lower, but did manage to turn higher late Thursday into Friday. That's bullish to start the week. NYMO and NAMO are starting a bullish cycle. Breadth thrusts are bullish, and we had the NYHL new highs beating out new lows, and we had the NYAD above the red zone continues to push higher in a steep trend on Friday. Put-call ratio is neutral to slightly bearish. If it keeps dropping, that would tell us to watch for a short-term top. US dollar is also backing off to the 200-day moving average. We were looking for that last week. British pound US dollar pair is bullish. That's putting a little pressure again on the FTSE and the London Stock Exchange for the last few weeks. It remains in a bearish fade below its trending 21-day moving average. Bonds continue to show phase 3, a distribution pattern. We're looking for yields to continue to move higher. We saw the 10-year yield bolting higher last week. That's bullish long-term for equities. Gold is still in this descending 15-week channel that we addressed over the last few weeks below their 9, 21, and 50-day moving averages. If copper continues to move higher, that would be bullish for equities, in particular construction and home builders. West Texas and Brent crude both moved higher for the 6th week, back above its 20-weekly moving average. The heat maps for both the S&P 500 sectors are continuing to improve slightly, with healthcare, mining, and some energy, oil, and gas names looking very strong. We also saw the international market improving as well, with Argentina, Brazil, and Chile as standouts. We'll look at some IBD 50 names and some MarketSmith Growth 250 showing relative strength, in addition to some top 20 volume percent stocks that look pretty strong for the week ahead. Bukowski showing 505 green with his CPI signal green since December the 4th, changing from 37.5% last week to 92% this week. That's bullish, with 4 bearish patterns, 46 bullish patterns, and 297 patterns waiting for breakout. Once again, the numbers in parentheses were a reference to last week's data. Bottom line, most indicators are bullish going into the week. We did close near all-time highs, so we are expecting that there could be a little bit of a pullback, but doesn't mean that we have to pull back. Again, indicators are mostly bullish for the week ahead. Starting off with the S&P 500 Equal Weight Index, no stock is more important than any other. We can clearly see price action reversed off the lower Bollinger Band. On Tuesday, continued to move higher throughout the week, closing near all-time highs once again, the upper trend line, and also the upper Bollinger Bands. What's important to note is the number of stocks trading above their 50-period moving average is back to 72.95%, which is telling you that breadth is improving. More stocks are moving higher. We had CCI signal give us a trigger during the week. We've yet to get to overbought, so there is a possibility we could hit this upper trend line first over the next couple of days. The takeaway again is that breadth is improving as prices rise. XII is also important. This is the Arca Institutional Index. It represents 75 stocks most commonly held in the institution's core portfolios that we follow. It is showing a reversal on Tuesday, a red stick. Last week we were watching for a second red stick. The first red stick would give us caution. The second red stick would give us a sell signal. We didn't get that. Wednesday we popped back above the 20-period moving average and then followed through Thursday and Friday. What's important here is that we got green sticks. We closed in the upper half of the daily range. Again, this is important because this is what institutions are doing. If they were selling, we would see more red sticks and more potential for a pullback in the short term. We're seeing the exact opposite. They were buying the dip. It also helps to look at the S&P 500 monthly chart. We are trading in an area of no overhead supply or a lack thereof. MACD has crossed on the monthly time frame, so momentum is clearly with the bulls. We are overbought on stochastic, but that can stay embedded as we've seen in the past through 2004 into 2007. It stayed in the red zone for many months. It's also important to look at the broad market. In this case, the S&P 1500 is 500 stocks from the S&P big caps, 400 mid caps, and 600 small caps. The significance of this chart is telling you that the advanced decline percent on a cumulative basis continues to rise. We are on a bullish signal since the middle of October. Histogram is confirming with taller histogram bars. And we see the Elder Impulse system giving us a reason to be more bullish as we change from 3 red elder sticks to blue and closing green on Friday in the upper half of the daily range. Additional measures viewed from the perspective of the even broader market, the Wilshire 5000 weekly chart, clearly on a bullish signal. We can see that dip that occurred on Tuesday. Buyers stepped up, push price action back towards the highs. RSI still has room to run to the upside before getting overbought like we saw in 2017. We also saw above average volume last week. That was clearly a tell. And since the September bottom, we told you look for a potential turn in Copac. The cycle is clearly moving higher and bullish, not at extremes. And also, we don't see a peak or a crescendo of any significance at the present time. So we're looking for the Wilshire to continue to move higher to start this week until things change, enough to warrant a caution signal. The NASDAQ 100 weekly also gave us reason to be more confident. Buyers stepped up again Tuesday, pushing price action higher through Wednesday into Friday's highs. We're just shy of all-time highs. RSI has yet to reach overbought, showing muscle like it did back in 2017 into the peak January of 2018. MACD is above its signal line, very significant in that bulls have control and clearly show buyers pushing prices higher towards the end of the week. The Russell 2000 small caps also gave us reason to be more confident and bullish. 3 weeks tight, broke out the previous week into last week. Following through, we can see the 50-period moving average has turned up along with the 20-period moving average. RSI has plenty of room to run. I really like this. We've been looking for a move above 160, 162 to give us a reason to be more bullish. We'll most likely add to our IWM positions going into the week because this looks very strong and bullish with momentum clearly on the side of the bulls with volume increasing. The New York Stock Exchange composite with candles, price action removed, only the moving averages. We can clearly see the 50 and the 200 period moving averages are rising and bullish. MACD is above its signal line and rising. NIMO and NAMO are also turning higher. We can see a little hook in the moving average as breadth continues to improve. And NYSE looks like it wants to turn back up after fading for several weeks, giving us a divergence going into all-time highs, representing a little bit of a caveat going into Monday when we saw that pullback Monday and Tuesday. So the takeaway is if we do have improvement in breadth, this would lead to a potential rally, as we saw back at the end of August into September when the moving averages turned higher, and again in October through November where we had a 2-month bullish cycle. Note SPY moved right back up to all-time highs, tagged that same zone and closed a little bit lower. RSI has room to run to the upside. We have MACD turning as a function of price, and volume picked up, though it was below the volume we saw on Monday and Tuesday to start the week. So my anticipation is that we could do a number of things. We could move sideways. We could break out altogether, as RSI suggests, or we could pull back in price and retest these lows and fill this gap. One of the reasons why I took a SPY hedge on Friday in the evening session. So we'll monitor this live during the trading session on Monday and Tuesday to give you a better idea what to expect going forward. The bond stock ratio is bullish for equities as bonds continue to fade from their recent highs. The ratio continues to drop. The moving average is flattening out. We're looking for that to resume the move lower, which would be longer term bullish. While high yield corporate debt, HYG, and junk bonds continue to move higher. As long as this trend remains intact, the investors chasing these yields are telling us that it's a risk-on environment, which is also bullish for equities. This also tells us to continue to expect bonds to show distribution at highs, as we've seen over the last 12 weeks, where price action now is back below the 10-period moving average in this case. RSI is moving lower, and most likely will come back and test this lower trend line, which would also be bullish for equities over the next few weeks as MACD continues to move lower. AGG weekly, the Barclays Aggregate Bond Fund, this is what institutional bond traders use as their benchmark, much like equity fund managers and institutions will use the S&P 500 for their benchmark. AGG continues to hold near its 10-period moving average. We have yet to rebalance this portion of our portfolio. We had already taken profits a couple of times as we rose from the October lows where we initially bought. 12, 13 months later, we felt that we would start to see some rebalancing. That continues to be the case. We're looking for AGG to start moving lower. If it takes out 111, I'll probably take more of my position off in my retirement portfolio. Currencies also had a decent week. We have the British pound US dollar bullish against the US dollar, rising pretty rapidly. We did see the FTSE and the London Stock Exchange moving lower. As a result, continues to fade along the descending 21-period moving average. So if you're trading the London Stock Exchange or the FTSE, you want to see the British pound weaken a bit in the short term. With similar thoughts for the yen and the Nikkei. If the yen starts to move higher, that'll create some forced selling on the Nikkei as the yen moves back above the 200-period moving average. And momentum is showing MACD above its signal line and rising, with the Nikkei responding in kind by pulling back. You can see the moving averages are starting to make a turn as MACD continues to move lower. All of this interaction with the US dollar, of course, being a bit weak, telling us that the safety trade is unwinding. We did bounce right at the 200-period moving average, tagged the 20-period EMA and got rejected there. So watch the 50-period, which is rolling over. If the 50-day moving average continues its bearish path, we would expect to see a bearish cross going into January and February, which would lead us to believe that the markets could continue the rally that started on this recent breakout. That bearish trend in the US dollar, of course, has an inverse impact on commodities. In this case, copper continues to move higher. We were watching this range for a breakout above these volume by price bands. If it does continue higher, look for construction related and home builders stocks to continue to move higher. Volume was above average and MACD has turned up above its signal line. This forward-looking economic indicator giving us a reason to be more bullish in the short term. Reinforcing that idea would be crude oil, a positive correlation to the equity market. Crude oil was up substantially last week, tagging the upper Bollinger Bands, those bands looking like they could open up in the short term if the crude oil does continue higher. That would be a net positive for the equity market as well. And with a bearish trend in the US dollar, you would expect to see gold moving higher. It was during the week, but got rejected on Thursday into Friday. Most likely the case being the safety trade is unwinding. People are less fearful as the markets hit all-time highs. So if that unwinding continues, expect to see gold move below this level here into this reverse Kirby. And this resistance, as we pointed out last week, did impact price action when it got to that level and the upper trend line midweek. RSI is dropping, of course, and MACD is starting to turn. Stochastics is already headed lower. So we would look for gold to continue to fade into these next couple of weeks into the end of the year. The sector heat map does have room for improvement. It is starting to see a little bit more yellows and greens. However, the red here is telling us that those areas could improve as well as sectors start to see more buying into the year end. The same goes for the international markets, where Argentina, Brazil, and Chile did improve last week. We saw Greece and Turkey also in the yellow, so that could turn a bit more bullish. Overall, the international markets pulling back a little bit, giving you an opportunity to trade those if you're so inclined. Looking at the sectors individually, only real estate, transports, the industrials, and utilities are below their 20 or 50 period moving averages. The rest are above. So we'd be interested in trading the sectors that are above their 20 period moving average, having pushed through recently, like we saw with XLB Materials last week, or testing it recently like technology, not too far extended like we saw with the communications sector. Even though Disney has been taking its time moving higher, we'd like to see this communications sector improving. We also are looking for energy to continue to move higher. There's a lot of institutional fund managers picking up on XLE weakness, starting to see a lot of those stocks moving higher on above average volume, suggesting that energy could be a sector for us to keep an eye on this week, with 3 weeks to go for the holidays. With the indices trading at all-time highs, we have fewer stocks that aren't so extended so as to make them untradeable or risky. We only have about a dozen stocks on the IBD 50 that are set up for a trade going into the week. Also with MarketSmith, a smaller list to start the week, where stocks like Adobe came back to the 9-period EMA. We can see on Friday, buyers stepped up at the low of the day. We're looking for Adobe to run back up towards the highs. A cup, perhaps a handle here, and a breakout continuation pattern going into next year. Most likely we could see higher prices if this continues to see volume and MACD turn as a function of price. RSI suggests there's more upside if we do see more buyers this week. Air Lease consolidated at the 21-day moving average, one of my favorite setups on a bounce. It's a little bit of a gap, but this does look like it's going to continue higher. Draw a trend line through these highs. Looks like we're going to break above these levels. RSI has room to run. MACD's turning, and volume was increasing as we continue to move higher on Friday. Look for AL Airlease to continue higher this week. BABA most likely will continue higher, though I would like to see a little pullback. We can see it has a potential to do that, so I don't want to chase this. If we do get an opportunity, we'll most likely trade BABA this week. Volume has been increasing, MACD's above its signal line, and RSI is back to the 70 zone. The same thing with CB Richards Ellis, CBRE. This company specializes in REITs, office buildings, and office parks. Breaking out, I'd like to see a little flag or a pullback for an entry. I don't want to chase it up here, but RSI suggests we could see higher prices. MACD shows bulls have momentum, and volume has confirmed the price movement that we saw Tuesday through Friday. Cargurus, I like when a stock pulls back to the 21-day moving average. We need to stay above it. If we do get a bullish candle on Monday, that would be the first signs of a bounce. You could wait until Tuesday for a confirmation if we do get a bullish candle on Monday and close a bit higher in the upper half of its daily range. Tuesday would be a safer entry. You could trade either day. RSI would turn up as a function of price. So we're watching how price action responds to the 21-day on Monday. That would change the direction of MACD as a function of price if we do bounce. Whereas a good example of that type of bounce that we're looking for is shown on CDW. We came back, moved below the 21-day, created a hammer on Tuesday, back above the 21-day. RSI is now rising. Most likely CDW will continue to move higher. It's in the technology sector, close to the 21-day moving average, but not too far extended to see technology continue to move higher this week. We're seeing MACD change direction. As a function of price, we'd like to see more volume to start a potential position on CDW, with RSI suggesting we could see more upside in the interim. The same goes for Chegg, CHGG. This company produces printed and electronic textbooks for schools, educational and tutoring type texts, where we would look for a bounce similar to what we saw previously at the end of November and a follow through. Wait for the first bullish candle. This could get a nice bounce. RSI is turning back up. We'd see MACD turn up as a function of price, of course. Looking for a bounce on Chegg going into the second week of December. Chipotle looks like it could continue higher. RSI has yet to get to overbought. MACD is above its signal line and volume has been increasing. There was a lot of talk about Chipotle last week on CNBC and Bloomberg, so we'll see how this plays out. A push higher on above average volume would definitely be a heads up, especially if it happens in the first 30 minutes, 45 minutes. We see above average relative volume to start the trading this week. Copart bounced at the 21-day, looking for RSI to continue higher. Need to see a bullish day. Friday saw the stock fade intraday, so this needs to be a little bit more bullish to start the week. InvestNet touched the 9 EMA on Tuesday, followed through. Looking like it's going to break out, take out these highs. Next target, RSI showing muscle, and MACD above its signal line. Stock moving higher on above average volume. Look for that to continue this week. The same goes for FleetCor. Nice pullback to the 9 EMA. Consolidated for a few days. Looks like it's going to push higher this week and start to move back up towards those recent highs. MACD is above its signal line. Volume is increasing. RSI has plenty of room to run. InMode responded as we thought it might. I didn't think it was going to drop below the 21-day. Regardless, we did see buyers step up at the same place where we broke out previously and where we retested and held as support. That occurred on Wednesday and Thursday. Buyers stepped up at the low of the day, inherent in these wicks. Followed through back above the 21-day moving average and the 9 EMA on Friday. Look for that to follow through and test these highs. Looks like it's banging out a range, so we're definitely picking up shares at a good place. Looking for 54, 55 in the short term, maybe a bit higher if we can test those highs at 58. RSI suggests we have more upside, volume increasing, and MACD's turning in this healthcare related stock. JP Morgan, Goldman Sachs, Morgan Stanley, Bank of America, all of those were pretty strong last week on that Tuesday bounce, followed through. Big expansion bar on Wednesday. Thursday and Friday, tighter price action. We did pull back in a little bit. This would be one sector that if it does pull in a little bit more, pull back to the breakout zone, that could put a little bit of pressure on the S&P 500 as there's about 13 to 15% financially related stocks in the S&P 500. So we'll be watching banks very closely first thing in the morning on Monday. Lido's holdings also right at the 21-day moving average. You note the wicks, buyers stepping up at the low of the day, closing in the upper half of its daily range on Friday, giving us an indication we should see follow through into Monday and Tuesday. RSI is rising and MACD is turning as a function of price. Look for volume to pick up first thing Monday and Tuesday. Lulu should continue at some point. I'd like to see a little pullback to the 9 EMA that holds like it did last week on Tuesday. That'll give us an opportunity. I don't want to chase it up here. If you're lacking a position in Lulu, this might be a little pullback that could get bought up. Pharmaceutical stocks were fairly strong last week. We're watching Merck, Lilly, Jazz Pharmaceuticals, and many other small cap, mid cap, large cap names in the pharmaceutical space. All of them look fairly strong last week. It might represent some opportunities. MACD's above its signal line and rising on above average volume. Microsoft responded well at the 21-day moving average, bullish with price action moving back above the 21-day and the 9 EMA to end the week. Buyers stepped up at the lows of the day, closing in the upper half of its daily range, suggesting that we'll see follow through as RSI rises into Monday and Tuesday, volume increasing and MACD's turning to start the week. ResMed, previously talked about this one, continues the trend along the 9 EMA, occasionally pulls back to the 21-day, usually represents a area to pick up the stock. It's rising and trending. StoneCo, this big white candle here was earnings. We did pull back to the 21-day on Tuesday, reversed back above the 21 and the 9 EMA, closing in the upper half of its daily range on Friday, suggesting with RSI rising that we could see a test of 41 and the upper ATR bands in the short term. MACD would turn as a function of price as this continues to rise going into the week. We're watching how Yandex holds the 9 EMA, a bullish candle on Monday. RSI would turn back up as a function of price. MACD would stay above zero and turn back up as well. We'd love to see additional volume, so watching Yandex in the short term could see a follow through. There was a couple of days several weeks ago where we saw huge relative volume. I'd like to see that happen Monday, Tuesday, Wednesday on any reversal to keep us interested in this particular stock going into year end. Some additional stocks we'd like to take a look at this week. Shopify looks like it's going to continue to move higher, as well as the stock showing relative strength this week. In the opening monologue, Progeny PGNY provides fertility and family building benefit solutions in the United States for 1.4 million members. This is a new IPO. This is from the relative strength blue dot scan, clearly showing relative strength. Following through, looking for this to continue higher, breaking out of this little range-bound pattern over the last couple of weeks. Looking for a follow-through as a candidate going into the week. Rocket Pharmaceuticals got a lot of press on Thursday and Friday. Again, blue dot scan, following through, looking for potential to trade on this one if it does flag and start to move higher as pharmaceutical stocks continue to show relative strength. We're also watching stocks that are trading higher on above average volume from this particular screener. A number of these names look pretty good. Domo, we had Cloudera also seeing above average volume last week. That was mentioned on CNBC, I believe. Zoomies also showing above average volume. Looking for a follow through, flat base breakout, fairly inexpensive name. GPX also showing up. GP Strategies Corp provides training, engineering, and consulting services to automotive, steel, and energy companies throughout the U.S. Looking for a follow through, build the right side of this cup perhaps. Annual sales and earnings doubling while volume precedes price as we look for more volume going into this week. SeaChange, another inexpensive stock, huge volume last week, noting the earnings, a beat of 155%, sending the stock moving higher. It makes digital video systems used to manage and distribute video, TV programming, and advertising content. So with the streaming really blowing up, this company could see more follow-through and earnings and sales. We're also watching stocks like DocuSign that showed up on the piercing pattern setup that we were talking about on Tuesday. Going into Wednesday and Thursday, we're looking for a follow-through. We got that on DocuSign. We also saw stocks like Workday after earnings reversing on Friday, looking for a follow-through. If Workday starts to head back towards the 21-day moving average, initial rejection most likely. If it does get through that area, look for a test of the 200 period. That would give us a higher low, potentially a inverted head and shoulders pattern. RSI rising, giving us a good setup if it continues to move higher. The threshold for me is the 9 and 21 day. If it gets above that, you got a nice little move between that level at 169 and back up to 177 for a good $7 if that does happen this week. So keep an eye on Workday. REAL, another stock that showed up that we're looking for price action to reverse and move above the 21 day. Look for that to happen this week. RSI is rising, MACD is turning, crossing, and giving us a bullish indicator for the week ahead. DXC also showed up on that piercing pattern scan that we saw Monday and Tuesday. Back above the 21 day on Wednesday, test Thursday, follow through. It looks like it's going to break out above 37.71. First thing, Monday, Tuesday. If it does, look for a gap fill and a test of the 200-day moving average. RSI should continue to move higher as a result. Apple also showed signs of institutional activity, above average volume on Thursday and Friday, following through, closing at highs with RSI with room to run. This could be a scalp on Monday and Tuesday. If we do get a good setup, we'll let you know live. We also had Starbucks continue, looks like an expansion day on Friday. A follow-through would be really nice. RSI would be continuing to rise. We're looking for the right side of the cup to build. As phase 2 starts to print more bullish candles, the markup period would look for prices to move back up to the 97, 98 range over the next several months. So this is a longer term swing. This one should continue to move higher. We'll sell some covered calls along the way, as Starbucks looks pretty bullish now that it's above the 9 and 21 day moving average. We also watch stocks like Chewy get back above the 21 day. This is flat now, so if the 21 day does start to turn up, that would be what looks like the beginning of a new trend. We also had people looking at Canopy Growth and some of the cannabis related names, looking for price action to move higher. Flat 21 day now, starting to look more like a trend break back to the upside and the start of a uptrend that could last as long as this downtrend lasted or even longer. So there's an opportunity here. Maybe trade some long dated options, March, April, May, June next year, a little bit out of the money. If it starts to move, we could see higher prices in the short term. That's going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com with your weekend video newsletter for December the 8th, 2019. I'll send out a watch list later tonight around 11:30 on the East Coast, 8:30 on the West Coast. Take care, have a great weekend, and we'll talk to you soon.